Hey traders, it's your boy Swizzle Chisel with Elite Trader Society, back to bring you another crypto market update video. And the video today is going to be on Bitcoin because we are in a very particular situation here. So, in the past couple days, we've had pretty decent pullback, roughly 15% from where we were on the weekly close last week. And I kind of just want to draw to your attention the 100 daily simple moving average and the 12-hour Fibonacci moving average. Both of these are pretty decent indications of whether or not Bitcoin is still in a bull market, given that over history, Bitcoin remains above both the 12-hour FMA and the 200 daily simple moving average when in a bull market, and then typically struggles to remain above them when in a bear market. So, kind of harkening back to the 2017 run here, there's quite a few instances of the 12-hour FibMA getting a pretty decent uh, price action touch, right? But there's not too many instances of the 200 simple moving average getting touched. Same with the 2020 2021 bull market. Both instances kind of have very, limited instances of price action touching the 200. Whereas in this bull market, we've seen quite a few instances of it, which kind of, you know, goes to a lot of the people saying that we're, in a different kind of market this time around and price isn't going to follow the same sort of stuff we've seen before, which becomes more and more true every day and month that goes by, with this uptrend we've been in. But with all that being said, we see that price is still currently showing support on both of those levels. The 12-hour FibMA is in a pretty steep decline, so another one to pay attention to here would be the daily Fibonacci moving average, which is currently sitting around the 77 to 74,000 level. So if we do break below these, this is kind of my next major zone I'd be eyeing for. The daily's even stronger than the 12, but with that being said, two oscillators that I really have been trying to pay attention to lately are both money flow oscillations. So in the last bull market, towards the first initial, call it a blow off top, it wasn't really a blow off top, but the first major top of the market cycle, there was a pretty steep bearish divergence in the money flow indications. So from this peak all the way up to the final peak of this movement, money flow pretty much bled out on the market cipher money flow indicator, and then also this MFI right here. So you can see pretty noticeably in these two peaks, we had that. And then at the actual all-time high peak, we had another instance of that same divergence. So, you get this major peak off of the initial push up, and then you get the secondary, UTAD kind of thrust up into that final high to sweep short liquidity before, going into the bear market. Both of these instances carried that same bearish divergence in the money flow. An instance from this bull run that we've seen was during this major consolidation period right after the bear market bottom, and we were kind of building the foundation for this uptrend we're in. There was this kind of slight but still significant money flow divergence here that played out in the form of, a very long-term multi-month consolidation phase, which is, par for the course, given this top also followed pretty decent multi-month consolidation phase before running for another high, which you can kind of see here. Same sort of thing, except this was earlier on in the trend, so the high kept coming. But now, with current price action in the past couple weeks, we've seen something arguably very similar with a key difference. So on the market cipher money flow indicator, we can see that this slightly higher high from 108 to about 109 on Bitcoin during these two peaks here shows a very similar um, you know bearish divergence. So this bearish divergence kind of starts at the initial peak here, which is pretty similar to the prior ones. Um, so at this initial peak was the final, up thrust of this big move up into the 100K range. That's where we got our money flow peak. And everything after that was divergent in essence. So, some of these movements here with the price coming down into this consolidation period before that next all-time high was still with the money flow as the money flow came out, but then into that last high, it was kind of flip-flopping around the zero line here. So it didn't really get that, nice push up that we would have needed to see to secure more upside movement. This kind of was really drawn out by the news with like the presidential inauguration, and then like the strategic Bitcoin reserve kind of news was kind of a big part of this big move here. So that's why some of the oscillations don't make sense, and that's kind of where I'm throwing this MFI into, since we kind of don't see any divergence here. So like we have divergence across this entire range with the market cipher money flow, but then on the MFI we don't actually have a divergence there. So just something to keep in mind, a little different, but still definitely something to be paying attention to. We really want to see money flow start to come back to zero here, to start signifying that, bulls are coming back. We're getting a bit of a bottom shape, and then realistically we'd like to see very little consolidation here, and that we just kind of get that pop up back would be, the bull case for this move. I think potentially the more likely case, given what we're looking at here with the money flow, is we are falling into a new range that we will consolidate, likely with 91K ish, these lows becoming new highs, and potentially even the old all-time high range, the 72 to 73K level, becoming the lows of this range, given maybe by wicks, or maybe it's a pretty long and thought out range there. But with all that being said, I kind of want to dive into some key levels here on the chart that give good confluence to our moving averages. So I've drawn two key Fibonacci retracements from this last move from the 50, 70K range up to the 100K range, mid to high 90K range, whatever you want to call it. So from this market low from the old range is the major outer macro, like Fibma, or Fibonacci retracement. And then inside of that, we have kind of this key, more local, but still macro Fibonacci retracement drawn off of this low. It was kind of the last low in this range before we broke out of it. So this is a key level. It was also kind of right around a weekly close. So it's not exact to any weekly session data, but it's, relative to this move. So we kind of had that expansion, got a lot of consolidation. You could argue this is a distribution pattern. I've seen multiple people reference this to a Wyckoff distribution. It looks pretty significant. If that's the case, we're currently in the spring move action. But with all that said, there's some resistance here that I've kind of gathered over the last couple month or so while we've been in this range. There's kind of this key swing area here that kind of acted as a macro resistance on like the higher time frames. So typically like the weeklies, we're not closing too high above this level, and you can see that it had support when it was above it and resistance when it was below it, all the way out until our big drawdown here. But as you can see, we're currently testing the more local Fibonacci retracement golden pocket, which just so happens to line up fairly well with our 12-hour Fibonacci moving average, as well as the 200 daily SMA. I would also like to show that the daily Fibonacci moving average lies around the 786 of that move. So that's also confluent at that level with this retracement. So yeah, with all that being said, I think the bullish outcome um, for Bitcoin here would be to kind of structure a bottom in or around this golden pocket. I'm not convinced that this low is the low yet. I think we could see maybe a deviation here with like a larger wick, maybe down to this the 50% level. But I think, holding 80K would be pretty significant. So seeing something like this play out, obviously the time frame here is a little off. I'm just kind of drawing this to show what we kind of need to happen for any sort of like, bull market continuation in the short term here. So over the next couple weeks, we kind of need to see something like this. Obviously, we're on the 12-hour chart. I'm drawing this a little wider, so it makes sense, but we kind of need to build a support foundation in this area and then just bounce out of it quickly. If we spend too much time consolidating in here, it's not going to be a good look. And I think a lot more investors are going to start, hedging against the upside and, not necessarily building short positions on the market, but, taking risk off the table. Whether that's the ETF crowd or the spot Bitcoin crowd, I think there's a lot of people that added to their portfolios up in this, mid to high 90K range, which at the time looked like good buys, but now are looking a lot more negative, right? So the context of their positioning, if your average Bitcoin price is above 90K right now, you're kind of scared, I'm sure, right? So you're kind of questioning whether or not you should be taking risk off the table or reallocating your position elsewhere, right? So I think with that, there's definitely some chance that we see another significant breakdown, maybe testing this 50% level, back test into the golden pocket, also testing the 200 simple moving average from below, and then probably losing the 12-hour, and then coming down into, the daily FibMA, which from there, we could gather support around the 76K range. But I think if we come down into here, we're probably going to see a test down into the 70K below, all the way down into that golden pocket. Because I think this is the golden pocket more people are paying attention to in regards to crypto Twitter and other places I watch for market sentiment. I think I've seen people reference this golden pocket quite a bit more than this one. So I think we could see this level get bought up. Where it goes from here is anybody's guess, but I'd like to see it just absolutely shine out of here with some like really good news. Maybe, this price gets low enough that the Fed, the US government decides, hey, let's take our chance, let's take our opportunity, let's start putting Bitcoin on the balance sheet. Something like that happens, we could see this huge move. And we get all this appreciation just gets right back, like priced right back in. But I think right now institutions and potentially retail investors are starting to look a little bit more towards maybe losing this level over the next couple months. Like this wouldn't be a quick one. This would be a couple weeks or months of testing before we lost this. But I think we could see further downside, and from there it really is just probably an extended bear market until we get some bullish news back in. I really, with the differences in the market these days and the massive changes with like the institutions and everything relative to the last two cycles, it's kind of hard to say whether or not an extended bear market for Bitcoin at least would look like they have before. So to that sense, I don't think we'd see 20K, 30K price targets. I think maybe low to mid 40Ks could be like a quote unquote bear market bottom. And then we see extended upside while, whatever narrative changes happen that kind of bring bullish sentiment back to the market. I think that there is a potential that Bitcoin is following more or less the same type of path that, the gold ETF or like the spot gold price did when it released ETFs back in 2007 or 2011, whenever that was. And to that point, I think we could see these kind of ebbs and flows on the macro scale of Bitcoin that last a little longer and maybe shift the dynamic of the coin over time. I still think that we'd have the 4-year cycle with the hash rate changes and everything. I don't think that effect will ever stop. I just think it may lessen and not be as apparent in the future. So, with all that being said, I think we're still in a good spot. If you haven't yet allocated enough Bitcoin in your portfolio and you're still looking to add more, or if you have, mid to high 90K buying price average, now is a good time to be allocating more if your time horizon is extended. So, like a 5 to 10 year or even longer time horizon on your Bitcoin investment today. I think that's a good spot to be in. However, if you're looking for maybe short-term gains or like trying to make a quick buck by buying $1,000 worth of Bitcoin today and hoping it's at 150K by, mid-March to late March, there's a chance for that, but I don't necessarily think that's a strong, risk-adjusted investment method there. So, with that being said, I think if you have extra capital, now's a good time, but otherwise, I think you should maybe ride what you're sitting on and wait for a little bit more of a confirmed bottom here. Because, if Bitcoin drops to 80K, for instance, you could buy at 80K, but there's a lot of risk at that point, right? Like it could just default, the floor could fall out and it just keeps going down. And then, you lose another 10% or 8% on the investment or, even more. So I think waiting for, a confirmed bottom signal and maybe buying back into the 86, 88, maybe even low 90K range might be more advisable than just trying to snipe a low today, because this is like a falling knife at the moment and there's no way to know where the bottom's going to be at. I do think this level is very solid right here at the 80K range. I don't think 80K is likely to break, but you never know. So with all that being said, if you enjoyed today's video, please go ahead and leave a like. It really helps get us into the algorithm. And if you haven't already, check us out on Elite Trader Society Discord. So I'll leave a link in the description. You can click that and get a free trial to check us out. We do futures alerts, options alerts, crypto signals, all kinds of stuff in there. Live trading sessions, every couple days, 2-3 days a week typically. It's a great place to be at just to, expand your knowledge and kind of learn more about the space. But yeah, I'll catch you guys in the next one. See ya.